Greetings, Jedi traders. David here of Trading Fibs to bring you the daily trend recap for August 24th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes to support your knowledge in the market. See what is going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Woe is the word for the books. This video will go down in the annals of history. As you can see here, the Dow plummeting as much as 1,000 points today, and that was right at almost market open. Dow down 789, Nasdaq 240, S&P 500 down 91 points. Did we go further? Oh, yes, we did. We'll take a look at that here in a moment. But here it was for the record books today. Price action moving like I've never seen before. Good luck if you were able to get a trade in. There were pockets. What could you have done differently? We'll talk about that. So let's jump right into the 5-minute charts and take a look at where price action was. Here on the Dow, you could see on a 5-minute chart looks lovely, but the question is were you able to get in an entry, hold on for the ride, as anything lower time frame was really a ride of a storm here. Today here we can see price action hitting the low. We're talking 1072 of today's low, and the high here 1149 almost, or 1148. What a swing in the market here on the Russell. Unable to go ahead and close out that daily gap. Looking at the YM macro pick, you could see price action at one time thought we were going to run up to that daily gap as price action was moving. That's right. Here is the today's open from the daily gap. What a huge gap down. So what did we see? We saw 20-point moves. On the Russell, we would see a 100-tick move. That's right, a 100-tick move in less than 3 seconds. Pretty volatile trading. And NQ, same picture. There it is. Almost to the T to the daily gap there, forming today's high around 41.97.50, a little bit slightly below that, coming down all the way down here to almost 39.10. Slight. ES, same picture. What a day on the ES. Just had to pick and find the right time frame to manage your trade. But here you can see a lot of price action. Today's open price action opening up, breaking upside, and not even able to manage to reach up to that daily gap up there around 1970.35. Let's take a look at the market profile. As we can see, price action here, a lot of value area built up on all 4 major indices, but again with swings from 1105 to up here to 1130, 130 point value area. Huge. Never seen anything like that before. As we can see, that's right, price action closing downside with, that's right, we have open points of control above. A picture I love to see is the Nasdaq. If you remember here, just not too long ago, we said that downside, the Nasdaq was heading down to close out points of control and leaving a trail behind. So if I had to say a market bias, well, at some point, that's right, the market's going to turn back upside and close out these points of control. Doesn't mean that we're going to go ahead in a straight line and do it. Take a couple days, it could take a couple weeks, it even could take a month or two. But the point is, as the market leaves open points of control, it doesn't like unfinished business, and eventually this market will turn back upside and go close it out. So what could we have done differently? As we see here, the market profile is going to eventually turn up. Daily gaps will be upside. Let's go ahead and turn our attention. We're going to focus here on the YM, as we can see the overnight session. The overnight session set up, and again, if I were to go ahead and show you a 10-tick range chart, which is usually for an intraday, you could see that price action here on the overnight switching to a 40-tick range chart. These are Flex Renko Heikin Ashi bars. You could see that it was much more manageable after looking at the market opening up Sunday night. What a lot of chop action, but always switching to the higher time frame does some wonders to your entry, and you still have the same setup. That's right, a little bit more patient. As we can see by the rules, T3 moving average crossover in line with the 534 and the 50 EMA under the 144, with the setup here on the crossover, placing the stop. That's right, placing the stop all the way up here, and price action coming down with a re-entry. A little bit of chop here in the middle of the overnight session, and then set up once again into the pre-market order. So this is already as we had talked about in the Dow, already down almost 800 points at this point, almost 1,000 points. set up into the day session. Now, let's go ahead and jump over to what we were setting up for, and here we could see the charts on the longer time frame using a 50 tick range chart. Here's our Russell. The Russell here on a 50 tick range chart after today's market action had a little bit of a bounce back up almost to that daily gap, but eventually rebounded. So what is the bias on all four major indices as we're moving across? Well, let's start here in the TF. T3 moving average has come back downside, 5 under 34. Remember, keep in mind, market profile. That's right. Let's go back here to the market profile for a moment. Market profile on the Russell with points of control open above, finding value area down here. All right, and now we go to our charts here with the bias, and when I say bias, I mean moving averages, T3 moving averages, both downside. The T3 set to a 5 EMA and 10. We have the 5 back under the 34, and on a 15-minute chart, we could see price action was unable to break the 50, and eventually, did break the 50, but unable to break the 144. So market action right now just having a little bit of a barrier there, and as we could see on our Fibonacci retracement, extensioning to the downside with a target down here of 1045.1. Almost reaching, that's right, that's former low back in October. If you remember that downslide that we had in the market in October, only to bounce right back upside and continue to the highs that we've seen recently. On a Fibonacci extension, price action still long hanging candles and wicks here on this daily chart. So the possibility and the probability of us coming downside and continuing to lay down some more points of control, or perhaps just continuing this downtrend, is highly likely. Okay, so again, Russell, chart number 1, 50 tick range chart, 15-minute chart downside, and a daily chart downside with a target down here of 1045.1 and a former level of 1038.8, I would say would be a highly likely probability. It doesn't mean it's going to get it. It just means the probability is holding up. Now, if price action on the Russell does continue to come back upside above the 50 and above the 144 and break upside, we'll then therefore go to a 30-minute chart. Once it's broken above the 30-minute, we'll go to a 1 hour, progress to a 2 hour, and eventually sit at a 4 hour chart once to confirm we're back in an uptrend. Right now we're sitting underneath the 200 period moving average. You can see here, fought a little bit here for about a week and a half, and continued downside. Here we can see the YM again, trading on a 50 tick range chart, absolutely no problem on today's price action. Knowing the volatility that was out there, but the price action, no swings. What a nice, sweet entry from the downside. We could see that market action on the YM ever since August 19th has been in a confirmed downtrend. 5 is still under the 34, even though we're starting to get a trend change here to the upside. But again, here we have in our 15-minute chart, price action unable to break the 144 today and continuing back to the downside underneath the 50. YM to the downside has several points of contention here, or resistance, which eventually might become some support. Absolutely on a Fibonacci, we've gone almost the full distance on an extension, but as we can see, breaking through here 769 and reaching right here to a former level of resistance 276, and now what was former support, resistance to the downside, one more level down here 648, which might also be in contention if the market continues downside. Here we could see the NQ, again, same trend that we've been forming on all the other indices, with a downward turn here back on August 19th, has been in a trend on a 50 tick range chart. Looking for the turnaround, is looking for our moving averages to cross back over to the upside, and we don't have that yet. As we could see, the 15-minute chart, the NQ, unable to break the 144 today and coming back downside with a former level here at 891.25. Again, if price action is to continue downside, obviously these trends would change direction and we get our T3 moving averages back to the downside. Anything different, we'll change back to a 30-minute, 1 hour, 2 hour, and back to a 4 hour chart to the upside. And last, the ES, what a wonderful trend down today with all the other major indices. 5 below the 34, 50 below the 144, unable to break that 50 period moving average. And also downside, we have a level here, former level 1813, as price action comes down. So let's jump back to our YM as we were just looking at. So let's take the big picture being downside 50 tick range chart, unable to break the 144, holding underneath the 50, and coming down all the way down here to 276 with open points of control upside. Now, once trend changes, then we can go and start to talk about levels right here above 16,600, 17,100, 300, and so on and up for it. But until that moment happens, the bias was to the downside. Again, YM 50 tick moving average, T3 moving averages to the downside. Overnight session 5 below the 34, and on a 15-minute chart, price action to this is our overnight action. Again, this is 15 minutes, so overnight action on over Sunday night, as we could see price action holding underneath the 50. And here we could see that T3 moving averages crossed over. HA candles downside. Now, if we had been on any shorter time frame, we would have seen a lot of chop on the way down. And with such price action on a Sunday night especially, it's key to note that it might be in your best interest to go to a higher time frame. And so the setup to the downside with a re-entry here, HA candles downside, the 5 under 34 and the 50 under 34. And when we have a 50 under 34, you manage your stop on the way down by placing your stop at the former recent swing size. Again, the trend being very strong. This 50 under 144 supporting the bigger move. What bigger move? That's right, the bigger move here with the T3 moving averages on a 50 tick, the 15-minute chart, all to the downside. Now, once price action had a little break here to the upside, you might have gotten out of this trade at this point and then re-entry as the 5 EMA back under 34, 50 under the 144. And as we entered into the day trading, U.S. trading hours, we could see here that, yes, an anomaly of days to remember. On anything shorter, I can't even begin to tell you. Well, let's go ahead and show you. If we go right here, to all the market action, look at how many sell signals and buy signals. This is over here on 10-tick range charts, together with the 5-tick range chart here in the ES. So many entries and executions, the sell signal and buy signal. Best imperative was to go to a higher time frame, would have probably kept you in a little bit longer and kept you out of a lot of the choppiness. With a market down overnight by 800 points, that price action was moving so quickly. So the highest probability of trades, remember our overnight session, go back to the overnight. The overnight, you had the T3 moving averages downside, you had the 5 under 34, the 50 under the 144, and if you remember here, we got the bigger picture time frame downside. The higher probability trade would have always been to the downside. Now, that doesn't mean you can't take a trade to the upside. The trades to the upside, you would want to make sure that you had a buy signal and a crossover on the T3 moving average, and you wanted to make sure that at least your 5 was above 34. Well, that would have been in play as long as the B and the X were closely together. The buy signal indicating that the T3 moving averages are in sync with the 5 above 34. Now, had you wanted to wait all day and just take the shorts on the signal in the short, you would have taken any trade with a sell signal, 5 under 34 and the 50 under the 144. So here would have been one terrific setup for you. You had a setup over here. That would have been 2. You would have had a setup a little bit delayed here. So your better setup would have been here, setup number 4, and then towards the close on setup number 5. Now, as we could see what happened here, price action attempted to make a run up on a 15-minute chart right to the 144. All right. Doesn't mean you had to stay out of the trade. As you can see on the faster price action, it was hard to get in on an entry, but here we have out of 11 setups, all right, exercising patience and discipline. You wait for the S and the X or the B and the X to be in proximity of one another, together with the 534, together with a tick count on a higher time frame. This is a 40-tick range chart. You could have done it on could have watched at 50, you could have done it on 30, but again, anything lower would have given you a lot of chop, and this was one of the best, after European close, one of the best price action. Here we go. We had market open over here. One of the best moves, control after the European close as price action made its way up at, what was that, around 11:30 right here. All right, a lot of chop here, but nice, smooth, controlled. This was about one of the best entries after the European market closed. And then obviously market returned it all the way to the downside. So re-emphasizing, it was the same picture all day. Re-emphasizing like I have day in and day out. You take a look at the big picture. The big picture on a 50 tick range chart or a 100 tick range chart, again, you're looking for the turnaround eventually. You got to go to a smaller time frame. Right now, you woke up this morning, you saw the market was a bias to the downside. Whether you were trading the TF, YM, you were trading the NQ or the ES, the bias was all to the downside. Price action you get into the market, way too choppy to trade that. You know what your overnight action was. Had you missed that, you come into today's price action and you simply wait for the entry. That's right, 50 under 144 would have been in sync with the market from the overnight session. So you would have had this zone and this zone, which kind of put you out of this entire move to the upside. Or you simply wait for the setup, for the counter trend to the back to the upside with a buy signal and a crossover. With the 534, very good setup right here, as we could see here around 9:56 Eastern Standard Time. Buy signal, crossover, even better when they line up right together. All right, some of these setups here where it just says S, the X is underneath it. All right, there's a B and an X, just a couple bars away from another. 5 over the 34, but you go to a higher time frame. You don't watch the market on such a smaller time frame. That's the lesson that you learned for today. So that concludes today's daily trend wrap-up for August 24th, 2015. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. Today, the time frame would have kept you more disciplined had you gone a little higher. You can find me every day on Twitter at TradingFibs, and always, I leave the crystal ball to the experts. I have no clue where the market's going to open tomorrow, but I am ready in both directions. I only trade what's in front of me and on my charts. Hey guys, have yourself a Blue Zone day, good night, and good trading.